Good morning, everybody. Happy Friday. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And of course, we're about to deep dive into the charts, into the data, into the probabilities and trade setups for the day. All right. So number one, we got import and export prices out this morning. They came in hotter than expected, quite a bit hotter. So we had PPI yesterday. We had CPI earlier this week that were showing, okay, not so much inflation. If anything, maybe basically even a downtick in the rate of inflation. Export and import prices today, definitely there is something there. All right, so likely it's coming. And don't forget, yesterday morning, Walmart came out and said in their earnings call that prices would be going up because of tariffs. So listen, whether there's a delay here, it seems like there is on inflation, maybe because inventories were bought so much ahead of the tariffs being implemented, but it looks more and more like eventually we will see a bump up of inflation in the overall price structure. All right, so let's jump into the charts here and take a look. This is the ES futures chart, the S&P futures. What this does is it gives us an idea on a 10-minute basis. So each of these candles are 10-minute long. That basically it looks to show us where the market was overnight and heading into the open. Now, what we can see is we closed yesterday right around here, right? So right here is where we closed the market last night, and overnight was pretty muted. This morning at around 3 in the morning, right here, 3 in the morning, like literally to the minute, we started to get a little buy program in the markets. Then we kind of floated sideways. We floated up a little bit more. And then right here is where import and export prices came out. And you can see that since then, the futures have come down just a little bit. Now, listen, we're still net positive, right? We're still up on the day. But the question is, does this start to creep in some doubt on the inflation side and then the ability for the Federal Reserve to do what they have to do if the economy slows? And ultimately, again, remember the reprieves that we've seen, whether it be with Europe or with other countries or China, it's really a 90-day reprieve, even with China, right? It was, okay, we're going to cut our tariffs for X amount of time for 90 days back to 30% on the U.S. on China. But if we don't reach an agreement, they could go right back to 145%. So lots of unknowns for the market. Right now, the market has continued to stay relatively strong. We were basically flat yesterday. Now, you can see this kind of grayed out area right here. I want to just show you where that comes from. That is my resistance zone right up here, mainly focused right in here, right? So you can see, again, these lows. We came down, we bounced up. We came down, we bounced up. And then eventually we hit it, small bounce, and broke down. And we've now retraced into that level. So there is some resistance here. Granted, the markets continue to be more resilient than even I would have anticipated with such a monstrous bounce. But we are at a point where the markets are very short-term overbought, right? Midterm, longer term, maybe not massively because we're going back to right where we were here before this downtick, basically a V-bottom recovery, much like COVID. But the bigger question is, as we come into the previous all-time high zone here, can the markets push through or do they get rejected and start coming down? And if they get rejected, is it just a pullback before we go to new all-time highs, or does it start to turn into a bigger collapse back down to the lows? All right, so lots of unknowns, but at the same time for us, the only thing I care about is this zone here. This zone is resistance, and I will be monitoring it very closely and trading it accordingly. Next up, the 10-year yield. We broke out above this kind of parallel line here. This was a bullish pattern. I talked about it about 3 weeks ago or so and said, all right, guys, you even have an inverse head and shoulders here. So we were going to likely break out. We did break out. Now we're seeing yields come back in a little bit. Where do you guys think we will likely find support on the 10-year yield? And the answer should all be from you guys. If you've been paying attention, it would be back at this line, right? So if we look at this, right, you broke out. So very clear trend line, down sloping. We broke out above. We came back in. We went up. We came back to the scene of the crime. We then rallied up, small pullback off this line and broke out. So just like we pulled back into this parallel here, the odds favor a pullback, but then finding support right around 4.28, 4.3% on the 10-year yield. And then the bigger question is, do we start to see a move? Like, let's say we do come back here, but then do we make another bigger move up like we did here? Right? Is that what's going to happen? And do we continue to go up? Now, listen, if the economy continues to weaken and let's say the jobs numbers start to fall apart, I have a hard time believing yields will go up. I really do. Overall, if you ask me where yields are in 6 to 12 months from now, I personally think they're lower. Partially because the U.S. has so much debt to refinance that we can't afford to have yields going up, but also partially that I do think the economy is going to weaken. So even if other countries say, hey, listen, we may not want to buy as many treasuries from the U.S., I still think the weakening economy forces the Fed to cut rates and ultimately, again, brings rates in a little bit. But listen, this is the kicker, right? Everyone is saying, oh, well, if we go into a recession, wouldn't rates go back to where they were during the COVID recession, right? Back to those lows. I don't think they will. I think there's a new pseudo normal now where rates will come in maybe into the 3% range, maybe even low 3%. But I have a hard time believing because of the inflation bug that now seems more inbred in the markets that we're going to ever see those crazy low 1-2% yields ever again. All right. And again, that's going to make it hard to stimulate when people are used to those cheap money policies. All right. Back to the charts we go here. And if we flip over to the VIX, this is something that is catching my eye. I talked to you guys about it a couple days ago. The VIX is now in the 17 range. Now, listen, 17 historically is nothing crazy, but to come down this quickly, this is one of the quickest drawdowns on the VIX, which is the fear index on the daily chart that we have ever seen in the VIX, right? So again, this is very, very quick that we've dropped all this fear out of the market. Once you get down into this range, you do have a little double bottom right around 17. And so you have to start thinking that once we get to 17 or below, which would be down here, down in this range, right? Look at how it almost always pushes back up, pushes up, pushes up, pushes up, pushes up, and then the big push. And so the idea here is that at some point, the VIX, which tells us whether people are fearful when it's at its highs or basically complacent and greedy at the lows, we're getting now towards a level where you need to be more alert as an investor, meaning that when everyone else is greedy and there's no fear, that's when I start to have fear on the markets. So again, that's how I use the VIX. Do I trade the VIX? I do trade the VIX sometimes, not so much through the futures market from through the SIBO, but more so through the VXX, which is a tracking ETF. And I can bring it up here. This is the VIX here. It's again, this one, please understand, this isn't the current contract. This is based on current, but also future contracts out. So it's multiple months out. So again, there's a little slippage there and so forth. But nonetheless, this again is how a shorter term swing trader like myself would likely play the VIX itself if I think it's going to go up. All right. Next up, I wanted to show you a couple great chart setups here. So JP Morgan. Look at this trend line. This is an incredible trend line. If you're a chartist like myself, you really have major respect for charts because of these scenarios, right? Look at all of these hits on this trend line. Support, 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 and support. And then small bounce right here and breakdown. And then what do we know that support turns into? Support turns into resistance. Hits it here, look at the drop. And guess what we just did yesterday? Right there. So what does this imply for JP Morgan, right? And remember, when I say imply, I mean probability. So not certainty. There's no certainty in trading. I always reiterate in these game plans because I think people almost always just, at least not you guys. I mean, if you're watching this, you guys are already more sophisticated than most investors, but they think, oh, it's into that level. Gareth's saying it's going to go down. So there's like 100% certainty that it's going to go down. No, there's no such thing. Trust me. I know. But the odds favor on JP Morgan that we're now at a point where probability is favoring a drawdown. And notice how I'm not like doing all this calculus over here. It's not like I'm doing all these crazy calculations. It's simply that this was a support line for literally 1, 2, 3. You could count 4 here, maybe 5, 6, and it broke. And now 1, and this is 2. this should cause a drawdown here. Now, how low? It's hard to know. I would think we would go back and test this high here around 253. So that would be a short-term pullback, and then we'd have to reevaluate. All right, so a very cool chart on JP Morgan, and this insinuates, again, probability-wise, that we would see a drawdown in the financials. Now, again, whether or not that is a drawdown in the overall market, it most likely would, but there's no guarantees. Excuse me, got a little sneeze in me today. All right, into UNH. UNH was in free fall. It continued that free fall yesterday with word that there was a DOJ investigation. This is now one of those scenarios where I absolutely love buying. Why? Well, number one, by the end of the day, what type of candle is this formation? I wrote it right there. That's a bottoming tail. Bottoming tails show, and look at the volume. This is pretty incredible. Look at how much volume you had. Biggest volume day. If I zoom out on this thing, I don't know if there's ever a bigger volume day on UNH, at least not going back to COVID and pre-COVID. I mean, literally, look at the volume here, all the way up here. There's not even anything close. Now, what do we know when you see a bottoming tail with massive multi-year volume? It's called capitulation. Okay, capitulation terminology is a term in technical analysis that says that when you see massive drawdowns and a stock has already been trading down and it sees this massive flush on bad news, that most of the investors out there, and this could be some mutual funds, some pension funds, some retail investors, they just panic and say, oh my gosh, dump it all. You know, the famous line from Wall Street with Michael Douglas and Charlie Sheen, you know, sell it all. The issue is that when that happens, usually that's the bottom, right? When everyone panics, it's usually the bottom. And notice I'm saying usually, there's no guarantees, but to have the bottoming tail form there, that tells us there's likely big money that came in. And by the way, pension funds, mutual funds, retail investors, they're almost all grouped together. All right. It's really, you have this 5% of hedge funds at the very top that are like the real smart money, like the BlackRock type smart money. And that's why you saw so the volume was the panic selling. But if it was all panic selling, why did price reverse off of its lows, right? So if we go here, we can see that price actually traded as low as 248 and closed at 275 and is trading at 282 this morning. So what that tells us is that there must have been major buyers down here that were just lapping up all those shares down there and buying it up. And that's that top 5% of funds out there. And so listen, while there's no guarantees, yesterday very likely could have marked a bottom on UNH. And it wouldn't shock me to see this trade not only back to gap fill at 308, but potentially after a pullback, maybe even fill the gap at 377. All right, Boeing. Boeing has had an incredible move. Trump's been in the Middle East. He's been getting commitments from a lot of these Middle Eastern countries to buy planes and do this and do that. Boeing has been the recipient of this massive move up. I mean, incredible move on Boeing. To put it in terms of percentages, if we take the low here and we go to the recent high, 62%. Now, by the way, look back at the low on Boeing. Look at this, guys. I mean, how good are charts? Like, look at this. Low from 09. So this is literally the Great Recession low in 09. Right here is your 2020 COVID collapse. Here's your subsequent hit right here. And look at what we hit, and that was the bottom. And look at what price has done since then on the weekly chart. Incredible. Absolutely incredible. But there's always a but. This candle, if we saw the bottoming tail on UNH, what is this candle here? That's a short-term topping tail. That shows me the beginning of exhaustion. The only difference here is you don't have as big of a volume spike. And so listen, if I had to compare the bottoming tail on UNH to the topping tail on Boeing here, you know, obviously the bottoming tail is the bullish, the topping tail is the bearish on Boeing, but the bottoming tail on UNH would be a little bit more powerful because of that massive volume. So again, ultimately, is this a bearish signal? Yes. Maybe not as powerful as the bullish one on UNH, but nonetheless, it is bearish. I wouldn't be surprised if we pull back. What would be our obvious pullback zone? Right in here. right? So this would be your first target, major support. Maybe it goes down here. You have these pivots here, but somewhere in this vicinity would be your pullback zone on a short on Boeing. All right, Cava reported earnings yesterday after the bell. The stock initially dropped. This is a fast casual Mediterranean grill kind of place. And again, big drop. And then it actually has climbed right back up. Nothing going on here. There's no trades here because price is back to basically the flat line. Take-Two Interactive fell initially on earnings. We caught it in the earnings trader yesterday. That was a great trade down here. We got out right at the lows here on the short. That was awesome. And again, earnings trader, by the way, is part of Smart Money Stocks and ETFs, one of the many offerings within that service. And then slowly, what has it done? It's come back to the flat line. So cross it off your list. No day trade there. And then AMAT's still possibility of a trade, right? Because it's still down. Now, listen, it's not down a huge percentage-wise, but if it were to continue to flush lower, we can start taking a look at our daily chart and seeing what there is. And I do have a level here, guys. So take a look right here. There's a big level right through in this range, 156 to 155. Gap fill, support here, and this area right here. So if we, right here, it's trading. This is where it shows. It shows it's trading right here at the dotted line. If AMAT flushes today to about 156 to 155, to me, that would be a day trade long opportunity in my book, and I would be keeping an eye on that with the live day trading room here at verifiedinvesting.com. All right, let's go on to Bitcoin real quick here, see what Bitcoin's up to. It's been pretty quiet recently and is not changing today. Bullish consolidation continues. You can see I put in the little parallel here for all of us to monitor. Again, at this point, this is a favoring to the bullish side. Any daily close below basically 100,700, and that would be a daily close, mind you. Then it would turn slightly bearish for a pullback into this area here. But as long as we stay in here, I would favor a move up to double top 109,000. Okay, next up, gold. Gold, which had a good bounce yesterday, is coming in a little bit today, right back in after that good bounce. There's still a massive amount of support here. Is it possible for gold to break this level and trade down, let's say, to here? The answer is absolutely there is. Just again, we need to see it break support before we assume that. Remember, always respect support or resistance until proven otherwise. And right now, this is major support here, and price is still above it, so we respect it. Silver, let's take a look at silver. Continues to just struggle inside of this range. And I say struggle, but the pattern is actually a little bullish here. So again, it is still a little bullish. As long as it stays within this zone, this would eventually, probability-wise, this would eventually lead to a breakout, you would assume. If it gets below here and closes below here, then no bueno, no good anymore. But aside from that, this remains bullish. Oil continues to kind of just chop around. Had a nice move up here, a small move down the last couple days, a small update today. No trade for me, but just keep in mind that this, if it goes like this for a long period of time, just ups and downs and chops, it is forming a bearish pattern longer term. To me, again, no trade on it at this point. And then if we look at natural gas, we can see here nat gas just continues to downtick off this level. No buyable levels on this. Maybe I would reevaluate for a potential buy down here, but that's still a really long way away. And then obviously, if it continues down, there's actually a gap fill at around 278 that I would be interested in a long trade, assuming it came straight into that level. Flipping back to the ES, the S&P futures, you can see since we started, we were kind of selling off, and now we're floating back up. So again, export and import prices were a little bit rough, meaning slightly inflationary signals. Markets did sell off a little on that, but have now started to float back up. And just keep in mind from yesterday's close, and we can see it on the daily chart, here's your daily close yesterday. We are net green on the markets on this Friday. So keep an eye on this, guys. Just stay very alert. And listen, we could continue to float up, but I would just say that the markets now have gotten very bullish. The VIX has shown us that, how low the VIX has gotten in terms of showing complacency, that people are just assuming the markets will go back to all-time highs. That makes me very nervous. I also think the markets are short-term extended. So at least for me, I'm very much on alert that all it takes is one Truth Social post about tariffs going back up, and the market could freak out again. And we're getting into that zone where most good news is priced in my opinion. We already have people are assuming there's a deal with China. They're assuming there's a deal, a full out deal with the UK and with Europe. And remember, the UK deal, it was only in relation to a few goods. It wasn't all comprehensive. So there's still things to be worked out there. But I think the markets are assuming that all these deals will be worked out. The question is, do they get worked out? We'll find out. All right. Thank you guys so much for tuning in today. You guys are awesome. Thank you so much for a great week in the markets. I will see you guys on Monday in the game plan. Take care.